the meteoric rise of gold and Bitcoin, and what it means for investors, the global economy, stocks, and geopolitics. Introduction. In the last 2 decades, few financial stories have rivaled the meteoric rise of two seemingly opposite assets: gold, the ancient store of value, and Bitcoin, the digital rebel of modern finance. Despite their fundamental differences, one mined from the earth, the other from lines of code, both have surged in popularity and price. They now occupy a central position in discussions surrounding the future of money, investment strategy, and global economic security. Gold and Bitcoin have gained prominence. Their rise is reshaping investor behavior, destabilizing traditional financial systems, and prompting a re-evaluation of geopolitics and monetary policy across advanced and emerging economies. 1. The resurgence of gold. Gold has been treasured for millennia as a hedge against inflation, currency devaluation, and systemic risk. But in the post-2008 financial crisis era, central banks around the world began accumulating gold at an unprecedented pace. Nations like China, Russia, and India have been quietly buying tons of gold to reduce reliance on the US dollar and build economic resilience. In 2022, global central banks bought over 1,100 tons of gold, the highest in over 55 years. The reasons? Concerns over fiat stability, geopolitical tensions, and a need for liquid, non-sovereign-backed assets. Gold's value has also been fueled by retail investors, particularly during COVID-19 and the 2022 inflation spike. With inflation in the US reaching over 9%, gold prices soared past $3,000 per ounce. It remains a safe haven in times of global uncertainty. Bitcoin, from cyberpunk dream to global asset. Launched in 2009 by the pseudonymous Satoshi Nakamoto, Bitcoin was designed as a decentralized, deflationary alternative to fiat currencies. Initially dismissed by mainstream economists and financial institutions, Bitcoin has grown to become a trillion-dollar asset class. By late 2021, Bitcoin had surpassed $68,000 in value. Institutional players like Tesla, MicroStrategy, and even countries like El Salvador adopted it as a treasury asset or legal tender. The quantitative easing from 2020-2022, that is, the huge increase in money printing by central banks, catalyzed its appeal as digital gold. Unlike traditional currencies, Bitcoin's capped supply of 21 million coins makes it an appealing hedge against monetary inflation and fiat debasement. 3. Investor sentiment and portfolio shifts. Retail and institutional investors alike are diversifying portfolios to include gold and Bitcoin. Hedge funds, sovereign wealth funds, and even pension funds now allocate a percentage of assets to these alternatives. The 60-40 portfolio, stocks-bonds, is being reimagined as inflation, low yields, and volatility upend traditional asset relationships. Gold provides safety. Bitcoin offers exponential upside. Together they provide a barbell strategy, one focused on preservation, the other on disruption. 4. Impact on global currencies and monetary policy. The rise of gold and Bitcoin challenges the dominance of the US dollar. Countries are increasingly trading in local currencies and exploring alternatives to the SWIFT payment system. China's digital yuan and BRICS move to settle trade in gold-backed systems represent strategic efforts to reduce dollar hegemony. Meanwhile, Bitcoin offers a parallel, decentralized network for international value transfer, especially in countries with capital controls like Nigeria, Turkey, and Argentina. 5. Stock markets and corporate strategy. Public companies are feeling the impact too. Firms like Block, formerly Square, Coinbase, and Grayscale have built business models around crypto adoption. Mining firms tied to gold and Bitcoin have seen their valuations skyrocket. Additionally, traditional stock markets are increasingly correlated with crypto cycles, and vice versa. Major crypto crashes trigger tech stock sell-offs. Fed interest rate announcements now affect Bitcoin just as they do equities. 6. Advanced economies, regulation, innovation, and resistance. In the US and Europe, regulators are torn between fostering innovation and maintaining financial stability. The SEC has taken action against crypto exchanges while simultaneously approving Bitcoin ETFs. Meanwhile, gold remains a reserve asset with tacit institutional support. Western governments still maintain large reserves, but are wary of giving Bitcoin legal status, fearing capital flight and tax evasion. 7. Emerging economies, survival, and sovereignty. For countries like Venezuela, Zimbabwe, and Lebanon, Bitcoin has provided a lifeline in times of hyperinflation and banking crimes. Gold smuggling and black market trading are also prevalent. El Salvador's 2021 Bitcoin law was controversial and highlighted the potential for emerging economies to Bitcoin has experienced 80% drawdowns, while gold has seen decades of stagnation. Their ability to truly replace fiat currencies remains uncertain. 10. The future: coexistence or disruption? Rather than replacing fiat, gold and Bitcoin may coexist in a hybrid financial world. CBDCs, central bank digital currencies, backed by gold or partially inspired by crypto design, could become standard. Meanwhile, Bitcoin and gold-backed digital assets could function as settlement tools in international trade. Investors will likely continue hedging against macroeconomic risks by increasing exposure to both. Financial advisors, once dismissive, are now building models with 5 to 15% allocations to alternative stores of value. The conclusion: the meteoric rise of gold and Bitcoin signals a profound shift in global finance. These assets are no longer fringe. They are central to discussions about the future of money, sovereignty, and economic resilience. For investors, they represent protection and opportunity. For governments, they pose both a threat and a tool. And for the world economy, they mark the beginning of a new era, one where trust, scarcity, and decentralization redefine value itself.